you show me the way? Should I go conventional or should I go FHA? Hello, this is J. Mike Perkins, and welcome to my mortgage channel. Both conventional and FHA are great mortgage products. But what do you do if you qualify for both a conventional mortgage and an FHA mortgage? Well, in this video, I'm going to give you some information so you can make a decision on which way, conventional or FHA. First, some background information. A few things that I think are important. Conventional has a larger loan limit than FHA. It's about 30% higher. FHA has a quirk in that normally you cannot have more than one FHA mortgage in the same area at the same time. Conventional does not have that restriction. In most cases, assuming that the loan amount is within the FHA limit, if you qualify for a conventional mortgage, you will normally qualify for an FHA mortgage. However, the reverse may not be true. You may qualify for an FHA mortgage and not qualify for a conventional mortgage. The reason is that conventional is harder to qualify for. You have to have a higher minimum credit score, and also conventional is more restrictive on this thing called your debt to income ratio, meaning for FHA you can have more payments relative to your income. A major difference between conventional and FHA is the way that each handles mortgage insurance. So what is mortgage insurance? Well, it's known as lender's mortgage insurance because it protects the mortgage company against their potential losses. It's required if you put less than 20% down on a conventional mortgage, and it's always required on FHA no matter how much money you put down. This is something very different than a kind of insurance that you could buy yourself that might make your mortgage payments if you became disabled or give you some kind of death benefit. That is something completely different. With conventional, the cost of the mortgage insurance is tied to your credit score and to your debt to income ratio. For FHA, everyone pays the same premium. For conventional, as you're making payments on the loan, if you can show the lender that you have 20% equity in the property, for example, you owed $80,000 on a house that was worth $100,000. If you can prove that, you can normally drop the mortgage insurance. With FHA, unless you put 10% down up front, that mortgage insurance is going to be there for the life of the loan. So if you qualify for both, conventional and FHA, which one of these mortgage bunnies do you take home? Well, let me give you a few tips. FHA might be better for the person who had a less than perfect credit score and or a slightly high debt to income ratio. The reason is that in this situation, the cost of the conventional mortgage insurance might be very high, and FHA might be able to give you a better deal and a lower payment. If you qualify for it and you're putting 20% down up front, then conventional is better because there is no mortgage insurance. If you're going to start off by putting 10% down and or you had plans to make additional principal payments to bring the balance down early, then conventional is usually better because you can drop the mortgage insurance in a reasonable amount of time. Now, if you start off with the minimum down and you have no plans to pay the loan down early, then FHA and conventional are really very close to each other. Even though conventional, in theory, you can drop the mortgage insurance, in practice that may not happen, and I'll tell you why. The average life of a mortgage loan is between 7 and 8 years. And if you put the minimum down and you don't pay additional principal, on average, it'll take you about 10 to 11 years to get to a point where you can drop the mortgage insurance. If the life of your loan is 7 to 8, you'll never get there. And in that situation, conventional and FHA are very close to each other. Thank you so much for watching this video. If you've enjoyed it, please help my channel by hitting like and subscribe. And now, more music. If you need a mortgage, in Texas, then you should give me a try. All you've got to do is scan the QR code and apply.